Good morning. Welcome to Stock Market Today, Monday, February 25th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas to consider, all hitting your inbox before the market opens each trading day. I hope everybody had a great weekend. But it's Monday morning, so let's get into it. U.S. equities finished higher in Friday's trading as small caps outperformed again. Technology, healthcare, and communications led, while consumer staples was the biggest decliner on earnings weakness. If you were paying attention, you saw what happened to Kraft Heinz on Friday. Treasuries were stronger across the curve. The dollar was little changed on the major crosses. Gold finished up 40 basis points. Oil settled up 0.5%, but off the best levels of the day. At the sector level, as we said, your outperformers, tech, comm services, healthcare, underperformers, staples, financials, finished in the red. Energy and materials underperformed as well. S&P futures are up 40 basis points after finishing higher again last week. That's as we get to the desk this morning. Asian equities were higher overnight with China. Big standout. President Trump extending the deadline beyond March 1st for raising tariffs. 5.5% rally in the Chinese market overnight. European markets are higher as well. Treasuries are weaker with some curve flattening. Dollar is stronger versus the yen. Gold is unchanged, and WTI crude is down 1%. As we look at the market here, we're trading toward the 2800 to 2820 zone. Here we have it marked off the top end of the zone. If we break through there, we target these highs. If we fade there, we start to look at support in the 2725 to 2750 zone, then near 2700. RSI is in an uptrend, moving into bullish ranges. Now what we want to see is, if we did fade here, and we test this 2725 to 2750 level, where does RSI go? If it kind of stays above 4050, we know we have momentum within an uptrend, and we want to be aggressive buyers on those pullbacks. If the RSI breaks down, then we know we're more likely to test the 2700. It's a roadmap. It's an if-then scenario. If this, then that. If the market pulls back to support at 2750 and RSI stays in bullish ranges, we know support's likely to hold, and we want to aggressively buy bullish and very bullish stocks in leading industry and sectors. Chaikin money flow remains solidly bullish as well. So the indicators are positive. Odds favor we're going to break through this level. I don't know if it's going to be this week, but odds favor we do break through this level and then test these highs. But it's important to watch how stocks react on pullbacks. Your market in a minute today. What am I talking about in my note to Chaikin Analytics clients? Well, it's Monday, so we're going to do macro themes and trends. S&P climbs toward 2820. We talked about that. 10-year yield remains under pressure, and that's aiding the bond proxies. Real estate and utilities have been two solid performers this year, and that's largely a function of yields continuing to be under pressure. Commodities are beginning to stabilize as the dollar rally stalls. We'll talk about why that's important. Metals and mining stocks see a trend change. It's a bullish trend change. Futures do point to a higher open here today on the back of that extension of Chinese tariffs. We're going to extend the date before raising tariffs. Major indices from a power bar perspective are continuing to improve. The Dow, 7 bulls to 3 bears. 139 bullish stocks, 56 bearish stocks for the S&P 500. NASDAQ, 32 to 11 bulls to bears. Small caps just continue to get better, just continue to outperform. Bonds uptick, sending yields lower. Tech, big outperformer on the day, up 1.3%. 26 bullish or very bullish stocks within the technology sector, only 5 bearish or very bearish stocks. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major markets are mixed with a bullish bent to them. Let's take a look at our stock of the day now. Speaking of technology, Micron Technology, semiconductor stock, closed at 42.57 on Friday, up 2.5%. Ticker symbol MU. has a very bullish Chaikin power gauge rating due to very attractive financial metrics, very strong earnings performance, and very strong technicals. That's the price volume activity. Stock does have negative expert activity, but we do appear to be in the process of changing trends. Down, beginning to stabilize. The key here is going to be, does it hold above the $40 level? 40 is the key. If Micron holds above $40 and begins to outperform the market, that to me would be your all clear to start to get involved. But let's run through the process. Very bullish stock, strong trend, strong industry group, fishing in the right pond. Very bullish stock. Now, our intensity of underperformance has been waning since the mid to late January, but we're not outperforming just yet. On top of that, we're closer to overbought. Money flow is bullish above a rising long-term trend line. Add Micron to your bullish watch list. We want outperformance. We want it closer to oversold. The key is going to be to hold above this $40 level. This $40 level is solid support. If we hold above there, you can start to look at Micron when the overbought, oversold indicator pulls back to an oversold reading, and if the stock is outperforming the market. Let's look at our sector tracker now. Movement of the major sectors over the last 5 days. Utilities, top of the list. Remember, I said yields under pressure is an aid to the bond proxies. Utilities are at the top of the list. And from a power bar perspective within Chaikin Analytics, utilities remain the top sector. Materials. You heard me talk about it last week, how downside momentum on a relative basis in materials was waning. The rally in the dollar is beginning to roll over a bit. It's beginning to stall out. That's helping put a bid to commodities, which is helping the materials complex. Also going to help the energy complex as well with oil. Tech is rounds out the top three. Discretionary industrials and real estate, middle of the road. Energy has been an underperformer of late. I think the stocks there are tipping out. Tipping that oil is getting pretty close to a solid resistance level. Healthcare, one of the names that we've been focused on, one of the sectors we've been focused on, because their outperformance has really started to waver, and we want to keep an eye on that. But the materials are the most interesting to me. We're going to take a look at that a little bit deeper today. Healthcare is our industry in focus, in particular healthcare equipment and services, which this was a huge group for us throughout 2018. We loved it. Then when it started to underperform, we got off that bus, and that was a great call because over the past 6 months, it's underperformed the S&P 500 by 4%. However, we don't remain dogmatic in our view. When the facts change, we change our mind, and we're starting to see some stabilization in relative performance, and we've got 21 bulls to 8 bears. So that power bar ratio, which measures future potential, is strong. Currently ranked number 12 of 21 subsectors. It's moved up 1 slot over the past week. Some indicative names here: Orthofix, Integer, and Lantheus. Let's take a look at one of those today. They all have very bullish Chaikin power gauge ratings. Let's take a look at ITGR here, because this is actually a name. This is a past bullish stock of the day for us back when the group was strong throughout 2018. ITGR, very bullish stock, strong trend, strong industry group. So we are fishing in the right pond. Notice that this stock has been an outperformer pretty much for the entirety of 2018. And even as the market was selling off back here September, October, and through the depths of December, remained an outperformer. This is the type of name you want to own. If you don't already own it, you want to buy it right. But let's walk through the process. Very bullish stock, outperforming the market. Market and model are in agreement. Dynamic duo in gear. Chaikin money flow, extremely bullish, above a rising long-term trend line. Now, the stock is overbought. So if you want to wait for it to work off this overbought condition, as long as it's holding above this $80 level, I think you're fine. You can own it. The other way to play it, though, is for the breakout traders, is that a breakout through this level here around $90, maybe you want to buy half your position and then see how it plays out. Either way, you want some exposure to this stock. How you choose to obtain that exposure is unique to you. You could buy call options for upside exposure. You can wait for the stock to become oversold and then lock in your upside exposure. However you do it, unique to you. Make sure it works for your process, but this is the type of name you want to own. Friday's S&P 500 movers and shakers, gainers and losers. on the gainer side of the board. Intuit up over 6.7% following earnings. Western Digital, WDC, caught an upgrade, sends that stock up nearly 5%. Dish, no real news to send that stock up 4.8%. PXD, it's Pioneer, their CEO retires and the stock goes up. I guess the investors were happy to see the CEO retire. Seagate, STX, likely up in sympathy with Western Digital, up nearly 4% or a little bit over 4%. On the loser side of the board, Kraft Heinz. Kraft Heinz speaks to the power of a model in taking your emotion out of the equation. Because Kraft Heinz has been a bearish stock here at Chaikin Analytics for some time. Down 27% on Friday as they missed earnings, guided down, announced this SEC investigation, and cut their dividend. It's important to have an unbiased process. Kraft Heinz is widely owned by some very well-known investors. That didn't stop it from going down 27%. The model was bearish. Take your emotions out of the equation. Campbell Soup, down 7.3%, another quote-unquote safe consumer staple company, down 7%. That name has been very bearish here for a while as well. EVRG, down 7.5% on earnings. SJM, Smuckers, down 5%. Didn't see any real news to drive that stock lower. And Noble, NBL, down nearly 3%. Now, your earnings this week. Mylan is a bullish stock that we're going to be watching on Tuesday. EOG is a bearish stock we'll be watching Tuesday night. Wednesday, Hewlett-Packard, PEG, Lowe's. We're going to start to see some of the bearish retailers report later this week. L Brands on Wednesday after the close, Gap and JW Nordstrom on Thursday after the close. EIX, bullish utility stock, going to report Thursday morning before the open. So let's dive in. What are we looking at today? Here's that 10-year yield that remains under pressure. I think these support levels here in the 2.6 to 2.62 area are going to break. What drives that view is the trend is down below a declining 50-day, below the declining 200-day, and RSI, after becoming oversold on 3 separate occasions, remains in bearish ranges. I think that the 10-year yield is likely to break down. That is likely going to keep the dollar under pressure, which should help commodities, which we're going to look at in a moment. But it's also going to keep a bid to those bond proxy groups, the groups like real estate and utilities. So just keep that in mind. If yields break lower, those are the groups that are likely to outperform. What's interesting is a lot of them are groups that have been outperforming. Commodity stabilizes, the dollar stalls. What are we looking at here? Here's the commodity index, ETF. Nice stabilization here and break, move higher. That's happened as the dollars move higher. Here's the dollar, has kind of stalled out here really since the November timeframe, sideways with a slight downside bias. As the dollar weakens, commodities should strengthen as global commodities are priced in dollars. So a weaker dollar provides a bid to the commodity complex. Obviously, we're not out of the woods yet. There's some solid resistance right here in the 1675 area. We have the declining 200-day moving average to contend with, but we're certainly seeing a bullish change of trend. Keep an eye on the dollar. That'll give you a clue what commodities are doing. Look at metals and mining. Making the turn is what we're saying here. Here's the XME, broken the downtrend line. Now it's going to test the 200-day moving average, which is declining. Odds favor a breakout, though, as RSI has shifted to bullish ranges. Momentum is with this change of trend. Notice how we're actually overbought here in the near term. So some stabilization is called for. But notice how the RSI is shifting to bullish ranges, and at the same time, XME is beginning to outperform the SPY. We've broken a downtrend relative to the S&P 500, and we're starting to work our way higher. I like these metals and mining names here. Look for the bullish and very bullish stocks to buy on pullbacks when they become oversold. Cleveland Clift is my bullish stock of the day today in my note to Chaikin Analytics clients. So that's going to wrap it up for today. Get daily stock ideas for free. Head over to chaikinanalytics.com/today. Sign up for that email. Follow along with this show. Stock ideas to consider all in your inbox before the market opens. And please share the show. If you like what you're seeing here, if you find value in what we're giving you every day, we would appreciate the shout out. Give us a share on social media, Twitter, Facebook, etc. I will look back. I look forward to seeing you back here tomorrow. Same time, same place. Have a great Monday, everyone. Let's get the week started right.